Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Construction Bank Corporation interim report. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand or sustain the business. China Construction Bank Corporation offers a wide range of banking and financial services to individuals and corporate customers globally. The company operates through various segments, including corporate finance business, personal finance business, treasury and asset management business, and others. The company provides numerous services such as loans, trade financing, deposit taking, wealth management, agency, financial consulting, cash management, remittance and settlement, guarantee, investment banking, interbank transactions, repurchase and resale, debt securities investments, derivatives trading, foreign currency trading, precious metal trading, custody services, finance leasing, asset transfer, fixed income investments, insurance services, reinsurance, cost consulting, engineering consulting, project management, investment consulting, bidding agency services, debt-to-equity swaps, private equity investment, development fund management, public offering sponsorship, corporate merger and acquisition, direct investment, asset management, securities brokerage, market research, house rental business, fund raising and selling, annuity and pension funds management, and pension advisory service. The company's diverse range of services caters to various needs of its customers, including individuals, corporations, government agencies, and financial institutions. With a rich history dating back to 1954, China Construction Bank Corporation has established itself as a leading player in the global banking industry. The stock price of China Construction Bank, CCB, has experienced a significant increase over the past year, ranging from 16.85% to over 40%. Several key events and underlying factors have contributed to this growth. One major factor is CCB's strong financial performance in the first quarter of 2024, which led to a surge in its stock value during the second quarter. The bank demonstrated robust growth in gross loans, financial investments, and customer deposits, while maintaining a strong capital position and attractive valuations. The introduction of advanced financial models, such as DeepSeek Roan, has also generated significant investor interest and contributed to a rise in shares across Chinese banks. Additionally, the announcement of a $72 billion recapitalization plan for Chinese banks in March 2025 has bolstered capital buffers and stimulated growth within the banking sector. CCB's attractive dividend yields have made it an appealing option for investors seeking stable returns. The bank's consistent history of dividend increases and transition to semi-annual dividends have provided competitive yields, such as 6.4% for H shares and 4.7% for A shares as of March 2025. Furthermore, bullish investor sentiment, partly fueled by expectations of an interest rate cut by the Federal Reserve in September 2024, has positively impacted the market capitalization of major global banks, including CCB. The decline in government bond yields has also encouraged insurance companies to reallocate their assets into banking stocks, seeking better returns. CCB's robust capital base and lower risk profile have been consistently highlighted as key reasons for its status as a preferred investment within the Chinese banking sector. A report from China's central bank in December 2025 indicated that banking institutions maintained sound operations, with risks generally under control during the first half of the year, further bolstering investor confidence. Overall, CCB's stock price increase can be attributed to a combination of strong financial performance, strategic investments, and favorable market conditions. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, an increase in China's GDP growth rate has contributed significantly to the revenue growth. Additionally, debit and credit card transactions have seen substantial growth, with RMB 12.12 trillion and RMB 0.3 trillion respectively. The wealth management business has also experienced significant growth, with investment and wealth management size reaching RMB 4.42 trillion. Furthermore, the number of debit cards issued has increased to 1,263 million, while credit cards have reached 129 million. The growth in wealth management customers is another notable factor, with nearly 4.5 million new customers added. Private banking has also seen a significant increase in assets under management, AUM, by RMB 3.18 trillion. Other drivers of revenue growth include the Rural Revitalization Initiative, which has led to an increase in agriculture-related loans by RMB 282,413 million. The Sino-German Bausparkasse and CCB Life have also seen steady business development, with sales of housing savings products increasing to RMB 32,133 million and net profit reaching RMB 610 million respectively. In terms of macroeconomic factors, supportive policies such as proactive fiscal policies, moderately accommodative monetary policies, and boosting consumption through special initiatives have all contributed to the revenue growth. The expansion of high-level opening up and stabilizing foreign trade and investment has also played a role. On the other hand, the primary drivers of revenue decline are largely external factors. Weak global growth momentum, geopolitical uncertainty, and global economic and trade outlook uncertainty have all had a negative impact on revenue. Additionally, specific investments such as Guoxin Jianyun Equity Investment Fund, Chengdu Partnership have also seen declines in revenue. The net income of the company experienced a mixed trend in the given period. Initially, it decreased by 1.45% to RMB 162,638 million due to several factors such as a decrease in net interest income, increase in operating expenses, and a decline in external net interest income and net fee and commission income. However, later on, there was a marginal increase in net income. The profit margins of the company also underwent significant changes during this period. The net interest margin decreased from 1.54% to 1.4%, while the net fee and commission income margin increased slightly from 16.73% to 16.9%. However, the operating profit margin declined from 53.2% to 51.1%. The overall total profit margins of the company also saw a decrease, dropping from 51.3% to 47.2%. This decline in profit margins can be attributed to various factors, such as decreased net interest income and increased operating expenses. The company's ability to generate positive operating cash flow is a crucial indicator of its financial health. According to the extracted summary, there are multiple instances where the company reports generating positive net cash from operating activities. On page 8 and page 113, it is stated that the company generated RMB 1,256,614 in net cash from operating activities for 2025. Similarly, on page 33, it is reported that the company's net cash from operating activities reached a significant figure of RMB 1.26 trillion. However, there are conflicting reports on pages 114 and 170. On page 114, it is stated that the company's operating cash flow for 2025 was negative, which contradicts the positive reports mentioned earlier. Unfortunately, page 170 does not provide any direct information on the company's operating cash flow. Despite these discrepancies, the majority of the evidence suggests that the company is generating positive operating cash flow, indicating a strong financial position. The company's debt level and interest expenses have undergone significant fluctuations over the past year. Initially, the total debt increased by RMB 31.3 billion due to gross loans and advances to customers, as well as deposits from customers. However, this trend was short-lived, as the total liabilities decreased by RMB 579,971 million from June 2024 to December 2025. Furthermore, domestic personal loans and advances saw a slight increase of plus 2.61%, while residential mortgages increased by RMB 231,777 million. In contrast, interest expenses have seen a notable decrease. Interest expenses on total interest-bearing liabilities decreased by RMB 38,407 million, with interest expense on deposits from customers decreasing by RMB 38,344 million, 16.01%. This trend continued into the following year, with interest expense decreasing significantly by minus 11.3% from 2024 to 2025. The most striking example of this decrease is seen in the interest expense, which plummeted from 188 million RMB in 2024 to 66 million RMB in 2025. The performance of various segments and regions within the company has been mixed. On a positive note, the personal finance business and treasury and asset management business have shown good results, with an increase in operating income and profit before tax. The corporate finance business segment, specifically CCB Financial Leasing, also performed well. In contrast, the corporate finance business as a whole experienced a decline in operating income and profit before tax. Similarly, the others category saw a decrease in both metrics. Additionally, CCB P&C Insurance was identified as a poorly performing segment. Regionally, some areas fared better than others. The Yangtze River Delta and Bohai Rim regions were relatively well-performing, while the Pearl River Delta experienced a slight decline. Overall, these results highlight the need for targeted improvement efforts in certain segments and regions to drive growth and profitability. Management's outlook on company strategy. The company is focused on delivering operating results that meet expectations while maintaining robust risk control. To achieve this, management is enhancing efforts in technology finance by improving capabilities through systematic implementation and optimization. In addition to technology finance, the company is prioritizing green finance, with significant progress made in implementing its strategy. This includes issuing a plan for high-quality development of green finance, increasing green loans, participating in underwriting green bonds, and investing in green industries. Management is also focused on balanced development of volume, pricing, and risk across various business segments, including residential mortgages, personal business loans, credit card loans, and commodity derivative transactions. This approach aims to provide high-quality services while guiding rational trading through risk alerts. Looking ahead to the second half of 2025, management plans to improve and strengthen its long-term mechanism for serving national construction, preventing financial risks, and participating in international competition. The company will prioritize coordinated development, providing high-quality financial services to support the real economy and safeguard financial stability. In terms of governance, Huijin has committed not to engage in competing commercial banking businesses, fairly treat its investments, exercise shareholder rights for the best interests of the bank, and not intervene with the operation and management of the bank. The company has a history of paying dividends to its shareholders. This practice is evident throughout various pages of the document, with multiple references confirming the payment of dividends. The consistent mention of dividend payments across different sections suggests that it is a regular and established part of the company's financial strategy. That concludes the financial summary for China Construction Bank Corporation. Feel free to comment below, and I will be happy to answer them when possible.